I'm going to, cover very important concept about the borrowings. So tell me, like, in anyone of you have worked on the, you know, uh, negotiation, then getting the loan arrangement from bank? How that it happens for the corporate? Any experience?
No.
Not for a large
No,
corporation, but for small company, yes.
Okay. So like suppose if you uh, approach bank for personal loan, housing loan, so you know the process.
Yes.
So first, like they will understand your requirement, they will check your eligibility, they will check
Financials.
your credit score, CIBIL score, and then they will check what kind of loan you are looking for. Then they will look for what kind of security you can offer, and based on that they sanction the loan.
So, Hemant, for corporates also there is a CIBIL score?
No. So this is the starting. Okay.
Okay.
So just to give you understanding, yes, like the way your personal loan or housing loan finance happen. Now coming to the corporate. So for corporate, always there is a corporate loan, and corporate loan is different. It is not like that. Like if you approach bank, they will give you term loan or cash credit. So always they come up with the kind of one kind of facility. Okay. So this is the term. Maybe like first time you have heard this facility. Okay. So this is the kind of facility they offer. Means they will offer you kind of a overall portfolio of the loan. So facility is overall arrangement of the loan to meet the overall funding requirement of a company. First of all, you need to understand what kind of fundings any company is looking for. Okay, so company may approach bank first of all for the bank account creation. So that is called current account. So we create saving account, whereas corporate create a current account wherein all the transactions, means receipt and payment happens. So what is the difference between saving account and current account? So saving account, there is a limitation. Every day you can't do thousands of borrowing and thousands of withdrawals. You cannot do that. Okay. Here you have a limitation. Like in this saving account, you can do couple of deposit and with withdrawal in a day. But whereas in the current account, there is no limit. Then another type of requirement for the corporate will be, they will look for the cash credit. Do you know what is cash credit? CC account. So this is the account wherein you will get some limit on and above your normal balance. Okay. So bank would say at a given point of time, I am giving you the limit of cash credit limit of 10 lakhs, for example. What is this limit? This limit is, suppose like you have issue a payment. So always you will not know what is the balance in your bank account. Maybe some of the receipt you you expect to come in bank, that may get delay, and because of that if your payments are on hold, it is not good, right? So that's why bank may give you cash credit, means additional limit on your current account. So here, current account, you can pay with your positive balance. But here in the current account, sorry, cash credit account, you can pay additional 10 lakhs rupees. Anytime the 10 lakhs credit, or you can say like in terms of bank, the debit balance you can have. And based on the fund utilization, bank will charge interest, okay? Interest will be charged. And here, the rate of interest are normally higher. Suppose if normal rate of interest is 10%, then bank will charge you 14 to 10%, because this is based on the usage of the loan. It is not based on like if you don't use fund, they will not charge you interest. Okay. Then another account is called overdraft. What is
Overdraft interest rate is more than cash credit interest rate, no?
Yes, maybe like overdraft also, like, but like it will be equal to cash credit, or maybe some banks like they will offer you lower than cash credit. Why? Because overdraft means they have given you this funding.
Yes.
OD account means, so they suppose if bank has given you 20 lakhs of overdraft facility, it means they have credited this 20 lakhs to you. Okay. So 20 lakhs fund is credited in your account, and interest will be charged on overall interest on OD balance, OD balance. So you can see in this case, bank has given you 20 lakhs loan in your account, and here, as and when you require fund, you can utilize. Suppose if you utilize for some fund for 2 days, then only 2 days interest you have to pay. Okay. So this is the two type of account I mentioned here. Coming to the next type of account, that is called working capital loan. Okay, now here, the nature of loan, if you see this, it will continue for long term. So there is no, kind of timeline for the cash credit. Only thing, there will be a terms and condition for renewal. But like it is not like that, like you have to pay this loan within some time, 1 year, 2 year. No. This is the ongoing facility which bank will give you. Okay. Working capital loan. So this working capital loan is nothing but it is a difference between your what I can say, investment and borrowing. So what happens, like bank has given you this cash credit, bank has given you overdraft facility, still you may require funding from bank. How you will, I didn't know that you need a working capital loan. It is very simple. Like if you see your projected financial, so suppose if I want to see like in next year January, what is my funding positions are there, means how much collection I'm going to do from sales and other receivables, and how much payment I have liability. Okay, collection and liability. So if you, because if you are running a corporate treasury department, then you should have the projection of the short term as well as long term, monthly. Like what is your projection? So suppose next month, if you have said like I'm going to get 100 crore of collection, but I have 105 crore of liability. It means you are negative of 5 crore, right? So you will go to the bank and say, I need this short-term arrangement of fund. That is, they can give you working capital. So the term can be anything, but it is short term. You can say 1 year, 2 year, 2 month, 3 month. So it is called the short-term loan. Okay. Then you have term loan. So term loan is what? You have your business expansion plan. Suppose you have planned to set up a factory. You have planned to set up some office building. For that, actually you need a long term loan. And here, like what you want to, sorry, here I'll tell you, working capital loan, normally what happens, the payment schedule, you have to pay interest monthly, okay, interest regular, and principal at the end of the term. You got it? Like in this case, working capital loan, if you have taken, then you have to pay interest monthly, but at the maturity, like if you have taken loan for 1 year, then after 1 year, you have to pay the principal amount. Term loan. This is a long-term loan. Long-term means you can say it will be obviously more than 5 years loan you will take. And here the payment term will be, you have to pay interest plus principal, that you call your installment. In this term loan, maybe you will have some moratorium period. Do you know what is moratorium period? Anybody?
No, I don't know.
So moratorium period is the period between the start of the loan and the period which bank has given you as a moratorium period. There will be no requirement to pay interest and principal. So no need to pay installment. So you can say freeze period this is, okay? What happens? Suppose you are going to build a factory. Your construction and build factory setup will take 1 year time. Then you will take another 1 year time to start the production. It means whatever investment you are going to do, you will get some return after 2 years. So how you are going to pay installment? You can't pay that, okay? So that's why you will take this freeze period, so that you will not have any liability. Reason is, suppose if I'm going to take 2 years to set up my business, if bank will ask you for the installment, then obviously you will pay installment from your term loan only. You are not going to earn anything, right? So that's why you may get a moratorium period as well. Then so these are the main loans, okay? Then you can have other loans like foreign currency loan. Then you can have foreign currency loan. Means what happened? Suppose you have some export orders. So to manufacture those material, you may need loan. So what bank can do? Bank can give you a foreign currency loan. Okay, and here what happens, like bank, suppose like I have an order of 10 crore in hand, and I need 8 crore of loan to do the manufacturing, or procure the material what I need to export. So based on this export order, you can reach to the bank and take this kind of loan. So as a payment term, what you can do, you can say when the collection will happen from customer, bank can directly take that money, adjust the loan, and balance they will transfer it in your account. So this kind of loan also happens. Okay. So these loans are called fund-based loan. Okay. So all these loans, so these are some example. This is not the exhaustive list. You will find different kind of loans, more type of loan you will. So this is called fund-based. Means in this type of loan, you will get money credited in your account. So whatever loan you can see here, when bank will sanction loan, you will get the credit in your bank account. Okay. Then there is other loans as well, that is called trade finance. So like letter of credit. Do you know what is letter of credit? Anybody? Hmm?
That bank issues or pre-approval.
No. See, now let us see the business requirement. Okay. So suppose, I want to purchase some material. I want to import some material. Okay. Or I want to purchase some material in the domestic market itself. So, like you will issue a purchase order. So suppose if I have issue a purchase order for 10 crore. Okay. Now, when you will issue this purchase order to your supplier, they would say, what is the guarantee? Like when we will supply this material, you will pay money to us, right? So bank, those parties will ask you for the guarantee, whether you will pay money or not, because they don't know, like whether you have capacity to pay or not. Hmm? So here I need to just give a kind of comfort or guarantee to the supplier. Yes, your money is secured when you will supply material, and based on the term of payment, you will get money. So supplier would say, how? So I'll give you letter of credit. So you will say PO is backed by letter of credit, LC. What is this LC? So letter of credit is a kind of guarantee by a bank. So letter of credit is a, you can say, guarantee paper which bank issue in your behalf to the supplier. So what happens? Suppose if there is a purchase order of 10 crores. So here, if my bank is suppose Citibank. Okay. So purchaser bank is Citibank, and the seller means supplier, I can say. Supplier bank is suppose HDFC Bank. Okay. Now, here Citibank will issue a letter of credit of 10 crore, which the purchaser will attach with the purchase order and give it to the supplier. the supplier will submit all the document to HDFC Bank, because supplier bank is HDFC Bank. So they will verify all these documents, whether the letter of credit which has been issued by Citibank is genuine or not, right? So between these two banks, they will do the cross verification, and if that is validated, approved, then you can say like your letter of credit is valid. Now bank is giving you 10 crore worth of guarantee, that paper, so they will charge you some percentage. So here you are using 10 crore of loan of a bank, and you are giving only some percentage. So suppose this overall purchase period is 90 days, so they will issue 90 days letter of credit. Now here the charges will be, maybe here it can be charges, so LC charge, or you can say LC issuance charge. It can be, you can say 1%, or maybe, so it can be on LC value, or it can be on fixed. Okay, so make possible, if it is 10 crore, then they will say we will charge 5 lakhs of issuance charge. So with this, not this is 5 lakhs is too much, 50,000, they would say I will charge you 50,000. So now you can see with this 50,000, you are using this 10 crore of benefit. Okay, so this is called letter of credit. Another kind of trade finance instrument is called bank guarantee. Do you know what is bank guarantee?
Guaranteed by bank, I guess.
Yes. So what happens now? Suppose you are going to bid a project. So suppose you are bidding for a project, or you are doing some contracts, or contract may be like you have, you are taking this some electricity connection, for example.
Hey, ZaranTech now offers SAP corporate training. That's right. Train your workforce in SAP with our comprehensive program. We offer customized courses, certified trainers, and hands-on labs for both individuals and businesses. Our standout features: bespoke training, fully configured servers for practice, in-house materials, and a dedicated LMS. Plus, get session recordings and 24/7 support. From functional to technical modules, we have got it all. Choose ZaranTech for SAP training and watch your team excel. Learn, upskill, succeed with ZaranTech.
Okay, with any kind of contract where you need to give a deposit to the your party. Now, if you give a security deposit, actually you need to transfer fund, right? When you give a security deposit, normally what happens, like you need to transfer the fund to the your counterparty. But here, what is the benefit? Like you will transfer this money, because like once you pay this money as a deposit to your party, then they may start using this fund for their own benefit, right? So that's why instead of giving this money to the your party, what you can say, you want that guarantee in case of like we are not able to meet our contractual obligation, you may invoke this uh, guarantee security, and you will take that money. So suppose I'm bidding for a project, and as a part of the project I need to give 1 lakh of deposit. So instead of giving 1 lakh of deposit, I can give 1 lakh of bank guarantee. And suppose this project is for 5 years, 10 years, 1 year. So this bank guarantee will be valid for long term, to the valid for the project duration. And bank will charge you some nominal amount against this bank guarantee. But yes, if in case of failure of the obligation, if you miss to pay to the supplier, if you miss to do your project properly, then they may go to the bank and encash their bank guarantees. So bank will pay this money to the third party or your counterparty. So this kind of arrangement is called non-fund based borrowing. So here, what is the benefit you are getting here? Actually, here bank will give you kind of facility that you have a letter of credit, you have bank guarantee, but here you are actually not utilizing the fund, but yes, you are utilizing the facility. And in case of emergency or unwanted circumstances, bank is ready to pay that. And obviously, like if bank is going to pay that money, they will collect from you, right? So this is called non-fund based. So very simple difference between fund based and non-fund based. In case of fund based loan, bank will transfer the money in your account. In case of non-fund based, bank will not transfer money, but they will give you kind of what I can say, facility that yes, this much of money you can utilize as part of letter of credit and bank guarantee. Okay, so if you see like how the corporate loan funding happens, so bank always come up with the facility or portfolio. Okay, so bank, suppose if I have chosen Citibank as my banker, and if I ask for the loan, then they will ask you, what is your overall requirement? You tell us your overall requirement on the short-term loan, working capital loan, term loan, what kind of facility you are looking for in letter of credit and bank guarantee. So all this is called credit lines. So bank will ask you, give us your credit line. Okay, so you will say, I want these 3 kind of loans. They will say, okay, so it means like you want fund based as a OD facility, working capital and term loan. So they will give you fund based facility, and then you will say also I want letter of credit and bank guarantee. So they will say, okay, so this is your non-fund based. And they will ask you like how much you are looking for. Okay, so suppose if you say like overall I am looking for 100 crore of loan, so they will say like, okay, what kind of combination you are looking for. So suppose you will say, I want 10 crore of bank guarantee, I want 10 crore of letter of credit, I want 15 crore of the overdraft facility, I want 20 crore of my working capital loan, and balance 45 I'm looking for as a term loan. So this is kind of credit line they will offer to you. And this is called facility. Okay, so this is called facility. So but you can say bank has given you facility of 100 crore. Now this 100 crore of loan, Citibank can arrange himself. Okay, if they have enough money, they can give you 100 crore of loan, but it may possible they don't have this much of money in with them, or there is a government regulations, so there may be a government regulation. So if you go for the infrastructure project, so suppose road construction, then bridge construction, wherein a government policy is like that, one bank cannot finance the entire funding, because suppose if that project get failed, one bank may become bankrupt. Okay, so that's why bank may say, the government may say, like, okay, if there is a requirement of more than 500 crore loan, then it should be financed by more than one bank. So that is called, bilateral facility. Okay, so here, if one bank is doing the finance, so now coming to the some concept of facility. If your entire funding by one bank, this is called bilateral facility. Okay, if funding is done by more than one bank, then it is called syndicate. So, like, if more than one bank is there, then it is called syndicate facility. And here may possible some for large loan, 1,000 crore, 2,000 crore, there will be 3-4 banks, wherein like bank has to form a consortium of the bank, like they will form a consortium, and from there they will have one lead bank who will talk to you, and they will say, I'll be the lead banker. Whatever funding requirements you have, you can talk to me. I will go to my consortium and I will see like how much fund will be financed by which bank. Okay, so like that. So in the syndicate facility, there will be one lead banker. Okay. So this is called the bilateral and syndicate. Have you understood this? Any confusion in understanding of overall funding or borrowing of a corporate? So in treasury module, as part of my borrowing, okay, in the treasury module, as part of our borrowing, we will cover facility and then we will cover the actual borrowing. Means we will first structure our funding, means loan requirement, with which bank, what kind of arrangements I have. So that credit line we will create in this system. We will create all these credit lines. We will set up like which bank, how much credit they have given, and based on this, like we will create facility. And when I will actually create this, like working capital loan, term loan, letter of credit, I will link with this facility. So whenever you will look at your facility, it will tell you like how much you have utilized. So suppose you have OD facility and on given date you have utilized of 10 crore. You have working capital loan. Suppose you have taken only out of 20, you have taken 15 crore of loan. You have term loan of 45 crore. So you may take 45 crore in one go. Letter of credit. So 10 crore is your limit, but at a given point of time, you are not going to utilize 10 crore. May possibly you are utilizing 2 crore. And here 2 crore, here 5 crore. So at the given point of time, if I draw the report, then you can say this is your facility, this is your utilization, and here you will say not utilized fund. So you may need this report, which will tell you how much you have utilized, how much you have not utilized. So all these reports will be available in Treasury module. Okay. Clear? So if this is concept is clear, then we will go to SAP system and we'll see like how we can set up a facility in system.
So just for one bank, or are you going to do multiple banks?
So we can do both scenarios. So when you will actually talk to your client based on the requirement, you can activate facility like you want a syndicate facility or you want a bilateral facility. Okay, so what I'm going to do here in the system, you have two product. Standard you can see here you have bilateral facility and you have syndicate facility. So suppose if you activate means implement syndicate facility, then your both scenario will work. You can go ahead with the one bank or you can go ahead with the more than one bank as well. Okay, there is no difference, but only difference is like here you can use multiple banks, here you can't use multiple banks. Okay, so let's start with the facility. So we will take this syndicate facility. Okay, so how we do the configuration? Always we go to the KDS. So here now product type 56(1). So we'll say here I will say just IN10 just for identification. Facility I'm going to take from bank, so always it will be a borrowing. Okay, so step number 1, we copy it and we'll say 1 IN10. Here interest is not applicable, effective interest rate not applicable. So this is the product we have created. Now if you go to the transaction type, then let's create one number range 56. And transaction type, so this is obtained, means we have taken. This is number in 56. Okay, so this is done. Then flow type. So here, like we will create some new flow type as well. So what kind of flow type we are going to use here for the facility? There will be a fixed flow type. So what are the fixed flow type? Let us understand that. It is very logical. Like if you understand the concept, then you will understand like all these flow types are very, reasonable, you can say, and relevant. So 56. So you can see here, like these are the standard flow type we have. Facility charges not utilized, facility charges utilized, facility charges overdrawn, and here credit lines charges, and this is the other charges. Okay, so here we will use as it is all these flow type. Okay, these flow types we will use as it is standard. And on top of that, we will create some new, flow type for the, you can say, you know, when we take the facility, they will charge as a one-time charge. Okay, one time, like they will charge. Then also you will have renewal charge. Okay, then if you have taken some loan, then like bank will charge you stamp duties. So these are the different type of charges bank may ask you. So here what we are going to do, I will say in the flow type, if you see whatever the number, so normally charges start with 19 series. Here you can see like all these charges are from 19. So we can say 1910, 1911, 1912. So like that you can create additional flow type for the charges. Okay, now this four flow type, it is not, it will may or may not create accounting entry. So you can see like this is relevant for accounting. Some of the charges will not be relevant for accounting, and it will be always to P&L account. Okay, so this as it is we are going to take, and some additional we will create. So what we can do, we will use this 1901 copy, and we can use this copy paste. Step is assignment of flow type. So 56B, from here, let us take this on. We'll say 51 copy. Okay. And then I need another 3. Okay. So these are the flow types. Now, like next step is update type. So update type, we know, like we have a standard update type for all these three. There will be update type, but for these three, we need to create update types. Okay. So for the money market, always it is start from M. So MM1910 negative means this is an outflow. Okay. 11. Why I'm creating all this new flow type, just to give you comfort. Based on the requirement, you can create new update types. Okay. So now let us create first update type here. Copy. And this is the transaction manager. So let's copy this 3 and here you can see this. This is done. And once you do this config, so it is going to be relevant for accounting. So immediately, so not to forget this step here, like I need to say like this is relevant for accounting. Okay. So you can see this is one transaction. Indicate update types for relevant to posting. If you don't maintain this transaction, then your accounting is not going to generate. So that's why here what you need to do, copy paste, and here you have to say relevant. Okay. So this is done. Now what is the next step I'm going to do? We will do the assignment of flow type to update type. So the standard one here you will have. So if you come down, so what are the standard? 1204. So you can see here 1204, 1205, 6, 7. It is available. Okay. Just I need to do the assignment for these three, but like I need to update here. So all the negative one, because I have to pay money. Okay. Five, 6, 7. But here this is copy paste. Just to identify. Now I need this 3 to be added. So what I'm going to do here, I'll keep this 3 negative. All are easy steps. You don't need to bother if you know the business process, and keep this updating here. Now, what is the next step we need to do? We have to, maintain the condition. This is very important. So you can go here, assign condition type to transaction type condition. So just go to 56B. So obtained 1901. This is the condition. Okay. So what is this conditions? I need to pay charges based on the overall limit. Okay, so that's why here they have said. So what I can do here for my company code, I would say this is based on, okay, I need to create the condition as well. We also have the one-time charge. Use the full long. Because this will be some percentage of my overall facility. Here we need to do the assignment.
What sets ZaranTech apart in SAP corporate training? It's our unique blend of expertise and innovation. We offer customized courses tailored to each client's needs, ensuring relevant, targeted learning. Our vast trainer database brings you wisdom from the best in the field. Need resources? Access our extensive training material repository anytime. We are all about measurable results, providing detailed student metrics to track progress. And we don't just teach, we build community. Join our thriving social media network, connecting learners beyond boundaries. With ZaranTech, you are not just training, you are transforming your SAP expertise.
This is done. Okay. Now for the syndicate facility, like this is one you can see here, like ranking, you have syndicate manager, syndicate bank. So you can create some ranking if you want, but not relevant. Like when you will start working on the client side, you will understand if you need to add something. Okay. And then finally here, assignment of valuation class. So we need to create one valuation class. So for that also, first we need to go to our KDS. So let us first update our KDS 561. Let's replicate this here. Setting for position management, assign valuation class, go to new, copy paste. So in system, nothing to be created manually, just you need to do this copy paste here. Okay. That's all. And we need to create as account assignment reference, and then we need to do maintain the derivation rule, right? So this is the derivation rule. Very simple. And just you need to understand like what are the steps are mandatory, and you can do this. An assignment of position management procedure. So same money market we can use here. Okay. So this is done all the steps, and let us here do the default setting. Okay. And here 561 we have set, right? So this is done. Now we need to create some GL accounts, expense GL account. Okay. Expense GL account starting 4. So what we can do, we don't need all this, whatever flow type we have, we don't need all this, for all the flow type, we don't need separate GL account. We can create 1 or 2 GL accounts. Okay. So what GL account we can create here? One you can create GL account for facility renewal charge and stamp duty. Done. Okay. Great. So this is also done. GL accounts are created. Now we will do the account determination. Account determination. Okay. The first step of account determination is update here. We need to update the position specification. Now let us see here what are the position specification has been assigned for all these update types. So one for 300. For this also 1 for 300. One for 300. It means like they have used same GL account for all this. Okay. So what we can do, these are the utilized, overdrawn. This is one-time charges. So we can say like for this also, we will use one-time charges. But for this two, I need to have different posting specification. So 14301 14302. Okay. And here what they are saying, charges bank commission to bank clearing. That is fine. And let us see what are the account. So if you see account symbol 422, this is important. Okay. So it is saying debit will be 422 for all these two, and credit is going to be bank. That's fine. Now I need to create account symbol for my this two new, because here I have separate GL account. It means I need a different account symbol. So 422. So here you can see 423 is free. So we can copy this. We'll say 423 and we'll say renewal charges. Four point two point three. Why I'm creating? Because I need a different GL account, right? And this is done. Now GL account, we know what are the GL account we are going to use here. So let me copy this GL account here. Normally I used to add one column here. Now we are, day by day we are getting familiarized with this. So it means we can do some shortcut as well. So you can see here. Okay. And bank account anyway, that is done. So Control S. So in the GL account assignment, what we can do, let's copy 3, because I have 3 different GL account. And here, this is 3, let us copy here. And here 561. So we have done the account assignment as well. So one more setting is required. Additional account assignments, cost center actually. So this is for 561. So all setting configurations are done. So now what is the next step? We'll go to BP and let's create new business partner, Citibank. Okay. So here we'll use our ZTRM. Oh my God. ZTRM BP. So that this is our BP company, Citibank. English. Payment transaction we can maintain 01 ID, country India. You can save this transaction, then go to change, and like this is my counterparty. Counterparty role. Let's go to the company, IN10, and here payment details we are not maintaining right now. Correspondence not maintaining here right now. Authorization. So suppose I want to give authorization for interest rate instrument and facility. I don't want to give authorization for other transaction. So it will not allow to do this transactions. Save this. That's all. This is my business partner. Okay, now you can see here we have all these credit lines. So before I create the transaction deal, I need to set up all these credit. So I'm going to teach you how you can set up all these credit lines. Because if you don't create all these credit lines, you will not find these credit lines in your deal. So let us first see like what are the standard FTR create. So product type is 561, transaction 200. So you can see here like this is the create facility. Start date, for example, this is going to start from 1st 12/2021, and this facility is for 5 years, 30th 2026. So you need to be very careful while giving the facility dates, because any borrowing, any transaction, if you create for the actual fund based and non-fund based borrowing, it will check whether that borrowing is falling within this date range or not. So that is very, very important. And here this is the facility start date in date, and here I'm going to say what is the start and in date, and here rank you can say syndicate manager, and partner is my this. Now contract date 01. Here this is the other lines. Here you need to go and actually select all those lines. So here I have all the prime lines and we don't have any line here. So when I'm going to say like how much facility I have received, so if I want to set up this 1520 under OD working capital, then I should have all these credit lines created in the system. Reason is once I will set up all these lines here, then only if I go to the next, like I need to go to the profile, and here I need to assign all these lines. Okay, I'll not say, but I'll show you. So here this is the total credit line. I will go and create, say how much I have got. Suppose this is my OD 15 million. So If I say 15 million and valid from 01/12/2021. Okay. And if I go and say syndicate, then here I have this partner, but not the credit line. So I won't be able to, get the report what we want, you know. So that's why I need to set up all these, customized credit line. So during transaction and when I'll take the report, I should have all the details. Okay. So that's why I need all those credit lines. Okay. That's why I'm not saving this, cancel. And let us see where we can set up all these credit lines. So we'll go to the accounting, financial supply chain management, treasury and risk management, transaction manager. We'll go to the debt management. Okay. Master data, facility. You can see here, this is the transaction code, TCL1. So it is not under the money market. It is under the debt management. Okay. So we'll go to the process credit line. Now we'll go to the new entry, and here how we are going to set up all these credit lines. So let us see, this is the hierarchy you need to create here, like credit line. So label 1 is this fund based. Okay. And under the fund based, I have suppose this 3 loans. And then I have non-fund based. Under this, I have this 2 credit line. So what I can do, we'll say this is 1, 1.1, 1.2, 1.3. So you can understand this is 2, 2.1, 2.2. So this is the hierarchy we have created. And here, you just copy, paste, USD. So you can give a currency you want. And copy paste this. So always you create what you want in Excel and here copy paste. Okay. Now very important. The drawing of the fund, it will not be done at the fund based or non-fund based. So drawing will be happen at here. So these are the labels where you are going to do the drawing of fund. So you can maintain like this. Now, if you maintain this kind of credit line, let us see, like when I create facility, what happens? So here, we'll go to the other lines. Okay. And here, this is the first label. We will select prime lines and it will come under the first. Okay. And then we will select, this is fund based, and then 1.1, 1.2, 1.3, and here we will select fund based, fund based, fund based. This is not Very simple. You won't be able, maybe like you will struggle sometime, but yes, you need to learn this. So non-fund based, this will come under the prime line. And then under this, we have 2.1, 2.2, and here I will say non-fund, non-fund. So this is the way you have to maintain the credit line. You can see how I have maintained here. Because I have given all these, number, prime number and subline number. So that's why it is easy. Now, like here, if you see overall limit, so this is also a art. So you can see like how much I have fund based. So you can see this is my fund based. So here, if you do the total, then this is my fund based 80, and this is 20 is non-fund based. So like that, when I'll go to the profile, now you can see here. Okay. And here. So now what I'm going to do here, first, let us see like how I'm going to set up this. We'll say create new and maintain all these details at the lowest level. So overdraft 15, 10 like this. So I'm going to say 15 million. This syndicate million, and here we will say overdraft. Sorry, sometimes I also make a mistake. Overdraft. I'll go to syndicate. Bank selection. So this is done. Then let us go to the second, working capital. $20 million. And here Citibank. Then term loan. Go to create. Like you have to closely look at this video again and again to understand all this, configuration is, configuration as well as the way like I have created this deal. You need to Citibank, and then we'll come to letter of credit. Inventory 10 million.
Our comprehensive student metrics ensure top-notch learning experiences. We track engagement through attendance, participation, and video interactions. Performance is measured via quiz scores and assignment submissions. We monitor learning behaviors, including time spent and revisit patterns. Our metrics cover social learning, course completion rates, and even post-course success. With technical data on platform usage and device information, we optimize every aspect of your learning journey.
Okay, so that's all. So right now we will do this much and we'll try to contract date is after start date. So this is the date we need to change. And just check that. Sorry. Now save this. So I have saved and let us go to edit. No, before edit, I'll show you some report. So that you will understand what information system facility. Let us see this credit lines. Okay, USD. Of credit. You see here report. So we have created one facility here. You can see D 15, 20, 45, 10, 10. Okay. Now we are not able to see the term fund based and non-fund based. So that's why here I need to modify this FTR underscore edit change and go to the profile, and here just a minute, do we have something? No. So let us go to the fund based. Total credit line fund based. Let me see prime line could do we have, so let me delete this. Okay, option not there. Then fund based. Okay, and here I need to say fund based is how much? 80 million. So I will say 80 million. Syndicate this 80 million, and here this is the partner, and then non-fund based bank. Our report should be perfect. Okay. So now go back. Let's see how this report is now coming. So now we can see here. I know like this is the one line we have done mistake. Now you can see now we have overall fund based 80 million, non-fund based 20 million, and this is the breakup. So are you okay with this report? Okay, so this is done. Now coming to the how we set up the charges. So to set up the charges, here you have two options. So option number one, if some charges are based on the facility utilization, then like you can go to these profile rule, other flow. So suppose here I have, this is one-time charges, and here direction, because you need to pay this charge. So I need to say direction is negative outflow, and how much amount? Suppose I'm going to pay 10,000 USD, and payment date is like I have to pay. So normally, like when you get the facility, you need to pay this money. Okay. So I have to maintain like this. Then if you double click this, if you want here. So this is one, just a minute. One tab is missing here. This I will teach you later. Administration, this is not required. Payment detail will do later. Cash flow, this is the charge. Okay. Okay. That's fine. So this is the charge. Suppose other charges I need to pay here. Now we can save this and we will settle this, because once I will do the settlement, it will be released for payment. This is done. And then, okay, one more information. So normally what happens, like whatever one-time charge you pay, client would ask you to amortize over the period of 1 year. So it depends, like if you want to amortize, then you have to set up the accrual deferral. Okay, so currently we are not doing that. Now I'll do the accounting for the facility charges. TBB1. So I've given this transaction number and just simulate this. Some error is there. So what is that error? Let us see this. No posting. Okay. So we did the account assignment, but posting a specification, we forgot to do the setup here. So we go to the new entry and we'll go to the RKDS. So we know like these are the three update type we have created. and here posting a specification. Okay. First, we need to create this posting a specification. 14300. Copy this. Here, this is 1. And what is this? This is the renewal charge. This is 4. Okay, now I can update type in. So 11, 12, and here I'll say this. I'll set up this. Okay. So this is good. Like if you miss any step while posting the transaction, you will find that. And let us see this. So you can see it facility charge one time and bank main account, it is credit. Remove test run and execute. So accounting has been posted. You can see here. Okay. So what we can do, suppose like I need to reverse some of the flows. So for example, like whatever charges we have posted right now, this is a kind of wrong accounting or this is wrongly posted, whatever could be the reason. So how you can reverse that? So now reversal can be done for all the transactions, all the flows. So you can say that like the rule of reversal is, so now coming to the reversal rule. So if I have to reverse, reversal can be done for all flow type. Means whatever has been posted, you want to reverse all the transactions, or you may want to reverse a specific flow type. Okay. So right now I'm going to tell you like how you can reverse one specific flow type. So suppose if I want to reverse, so now you need to go to the change. And if you go to reverse, sorry, if you want to reverse the entire deal, then you have to select this reverse. Okay. But I want to reverse only one flow type. Now go to in change mode. Here you can see, select this, go here and here you can see reverse. Okay. So you select this flow type and say here reverse. Now I have said reverse and we will save this transaction. Go to change mode. So first select here reverse and then here reverse flow. Yes, so this sign should come here and status should be like this. So you can see status is posting flagged for reversal. So now once you get this flag reversal, you save this And to reverse this transaction, because like accounting has already been posted, now I need to reverse that. So for that, you need to go to TPM 10 transaction. So posting, you can see here TPM 10. So TBB 1 is for normal posting. TPM 10 is for reversal. So you come to this transaction and you can limit by transaction number. So you can give a specific transaction number. Reversal date, you don't want to give, no problem. And currently I'm doing this test run, but you need to give the reversal region. So other region you can say, and test run. So you can see this is transaction will get reversed. So you can select here and you have to say execute. And just check the log here. Okay, so it is saying region 4 cannot be processed. So let us try with 1. Yes, it is green means here you can see it is a reverse accounting. So once you will post, then you will get the accounting. So remove this test run, execute, select this, reverse, and now you can see the transaction accounting here. So you can see credit facility charges and bank is debit. So this is if you have to reverse one flow. But suppose because of any reason, I need to reverse the entire transaction. So let's try that. Like I can select 5, 1, 1. So we have fixed deposit. Let us see like what are the transactions we have done here. So you can see all these transactions, only one has been posted. So will not get much benefit here. So let us see the other. 3 flows has been posted. So let us do this reversal. Okay. So suppose because of XYZ reason, I want to reverse this 3 flow type. Okay. Select this reverse. Go to, and here you select the reversal region. Reversal due to processing error by clerk, whatever, and save this. Okay, now go to display. You can see here all are showing 0. Then you need to run this TPM 10 because you have reverse from the deal, but here I need to reverse the transaction as well. Okay. So you can see we have 3 transactions. Okay, I need to give this reverse. Just a minute. Let us run this. Yes, this is fine. So we need to remove this test run and execute this. So update successfully. So if you see this log here, so all transactions got reversed. So when we had created fixed deposit, my accounting entry was fixed deposit debit, bank account credit, but now you can see the reversal. Okay. So this is the process of reversal of transaction. So you can reverse one flow type or you can reverse the entire transaction. So once you have reversed, now we can see for this deal, all the status has been reset to 0. Okay, that's why here once you reverse, you need to settle this. Then only once again you would be able to now you see this status, it is reset to 1. And when you do the reversal, you would be able to change anything. Unless you do posting, you would be able to change any details here. So this is about the reversal.